There's a massive tectonic shift happening right now in the cryptocurrency space, and XRP investors need to pay close attention. We're not just talking about a regular market fluctuation, we're talking about something deeper, more strategic, and potentially game. One of the largest and most important partnerships in the history of XRP has just been announced, and that alone would be major news. But there's more. The odds of an XRP ETF gaining regulatory approval have skyrocketed, with multiple analysts now projecting approval likelihoods nearing 95%. This is no longer a long-shot fantasy. We are entering a new financial era. Yes, the market overall is in a downturn. Bitcoin has seen sharp pullbacks, and global uncertainty is weighing heavily on investor sentiment. But behind the curtain, powerful institutions are making calculated moves. Geopolitical tensions in the Middle East have sent oil prices surging, and crypto prices dipping, creating the illusion of weakness. But savvy investors know the truth. This isn't a collapse, it's a strategic setup for the next explosive bull cycle. XRP is at the epicenter of a financial reset. What's happening right now is going to catch most of the market by surprise. Stay tuned, because the coming moves will shake the foundations of digital finance. Welcome back to the XRP Ripple Insights channel, your trusted source for the most important updates in crypto. The landscape is shifting rapidly, and if you're not paying close attention, you're going to miss out. We're now witnessing what may be the early signs of a seismic financial reset. The buzz around an XRP exchange-traded fund ETF is reaching fever pitch, with the approval odds currently sitting near 95%, according to leading analysts. This isn't speculation, it's a reflection of mounting institutional interest and regulatory momentum. Meanwhile, volatility across the broader crypto market is spiking. Bitcoin dropped sharply below $100,000 following Iran's retaliatory missile strike, a geopolitical shock that sent ripples through global finance. XRP also took a quick dive under $1.90, but, unlike many altcoins, rebounded quickly. Why? Because institutional hands are quietly accumulating. These price movements aren't random, they're signals. This is what accumulation looks like. Large players are buying while fear dominates the headlines. Don't fall for the trap of emotional trading. When fear is high and retail investors are selling, that's when smart money enters. That's what's playing out now. XRP isn't just surviving the storm, it's being positioned as a central asset for what comes next in global finance. Let's take a moment to recognize our amazing viewers who bring sharp insights to the table. JJ Johnson commented recently about oil stocks being ripe for accumulation, and I've got to say, I completely agree. In fact, I've been quietly building positions in oil for months. Why? Because historically, global conflict creates volatility, and volatility sends energy prices surging. It's the classic buy low, sell high strategy, and it never goes out of style. Every time there's geopolitical unrest, from missile strikes to sanctions, oil becomes a safe haven for traditional finance. When institutions rotate out of risk assets, they don't just exit the market, they reposition. Crypto investors should be paying attention. These macro events aren't just background noise, they shape asset flows. When oil surges, it's often followed by a strategic re-entry into undervalued growth sectors like crypto. Also, Uno bugged me. One shared a nostalgic memory about KB Toys, and it hit home. Remember the rush? KB, Toys R Us, Circuit City. They're gone, but the behavioral patterns remain. In crypto, we see the same thing. Excitement peaks, people pile in. FOMO drives metrics, then things cool down. That's the rhythm. We're now in the cooling phase, and that's not a bad thing. Now, let's address the big elephant in the room. The dramatic drop in XRP's on-chain activity. Yes, unique address counts have fallen sharply down nearly 80% since December. To the casual observer, this might appear catastrophic, but zoom out, and the picture changes completely. December's activity was inflated by hype and retail FOMO. Unique addresses peaked at over 100,000, an abnormal surge. Today, we're seeing activity normalize back to a more sustainable level, hovering just under 21,000. Is that a failure? Not at all. This is the calm after the storm. Think of it like this. If someone gains 600 pounds in a year and then loses 300, that's a dramatic shift, but context matters. Crypto metrics are the same way. You must analyze trends in the full scope. XRP's ecosystem remains fundamentally strong. Developer activity is consistent, partnerships are expanding, and institutional infrastructure is being built. Don't let flashy headlines or fear-based narratives distort your view. What's happening is a consolidation, not a collapse. We've moved past the mania phase. What comes next is stability, and then growth. Metrics matter, but interpretation matters more. Always view crypto stats with context, especially during times of emotional market reaction. Now for the game-changing development that everyone should be talking about. The new partnership between Circle and Fiserv. This is not just another corporate collaboration. This is foundational. For those unfamiliar, Circle is the issuer of USDC, one of the world's most widely adopted Fiserv is a legacy financial giant with deep roots in banking and merchant services. Their integration signifies something massive. Traditional finance is no longer dipping its toes in crypto, it's diving in. With this partnership, state infrastructure is now directly tied into the existing financial rails used by banks, merchants, and institutions. Circle shares surged 21% on the announcement, a clear sign of investor confidence. This isn't hype, this is capital migration. Circle's IPO, once pegged at $24 per share, could easily 10x if execution continues at this scale. Why? Because institutions want access to crypto, but they want it clean, compliant, and wrapped in familiar systems. Circle provides that. It's crypto with a suit and tie. Meanwhile, OKX is rumored to be prepping an IPO as well, but its model doesn't command the same trust level from traditional players. Circle is bridging the old and the new, and that matters in this financial evolution. It's impossible to ignore the direct connection between geopolitics and crypto. Price action. The Middle East is a pressure cooker, and it's impacting every market from energy to equities to digital assets. Following the United States' recent military engagement, Iran launched a missile retaliation that shocked markets worldwide. Immediately, Bitcoin tumbled, dipping below the $100,000 mark. XRP followed with a sharp drop of its own. Ethereum and other major tokens also reacted swiftly. This pattern is becoming clear. When global tensions rise, risk assets face downward pressure. But here's the twist. Once the dust settles, crypto bounces harder than traditional markets. That's because crypto remains one of the few asset classes with asymmetric upside potential during uncertain times. A ceasefire, or even the suggestion of diplomatic de-escalation, often triggers an immediate rebound. XRP's resilience in these moments is crucial. It's not just about surviving the hit, it's about snapping back. These are the kinds of moves that reveal strength. So don't be discouraged by sharp price swings. They're part of a larger macro rhythm. Instead, use these moments as data points. Learn to read the market like a chessboard. XRP is still in the game, and it's making strategic moves. Let's dive deeper into what could be the most pivotal catalyst for XRP's next bull run. The ETF Bloomberg analysts James Seyffart and Eric Balhunas have publicly raised the approval odds of an XRP ETF to 95%. That's not just bullish, it's nearly inevitable, but there's a caveat: timing. While the odds are strong, the timeline still points to late 2025. The SEC is inching forward, slowly cooperating with issuers, but progress remains glacial. Still, their recent actions, including delays for HBA, R and other tokens, show consistency. They're using stall tactics, yes, but they're also laying groundwork. More importantly, the growing conversation around giving XRP a CFTC-style oversight treatment means it could soon be considered a commodity, not a security. That shift alone would make ETF approval vastly easier. Commodities are much more ETF-friendly under US law. Think gold, silver, and oil. Now think XRP. This isn't a wild dream anymore. The pieces are aligning. Institutions need regulatory clarity before pouring in billions. An ETF provides that doorway. Once that gate is open, floodgates follow. The key takeaway: delays aren't denials, they're just friction before flight. XRP is lining up for its biggest leap yet. All it needs is the green light. Let's wrap this segment by looking at the numbers from a trader's perspective, and that means checking real-time prediction markets. According to Polymarket, one of the most accurate crypto forecasting platforms, there is currently an 89% probability that an XRP ETF will be approved in 2025. That is an incredibly strong indicator, especially when you consider that these odds are priced in by real money bettors and informed investors. What's more, there's a 13% chance XRP becomes a global reserve asset. Still a low percentage, but not zero. That's meaningful. Any non-zero probability in finance, especially when paired with strong fundamentals, is worth watching. Poly also reflects an even split, a true 50/50th chance regarding XRP's price movement on June 25th. These aren't just numbers, they represent sentiment, expectations, and strategic planning. In volatile times, it's essential to use data, not emotion, to guide your decisions. Trading based on gut feelings can be disastrous, but trading based on probability gives you a measurable edge. Learn to think in odds. XRP is showing strong support across institutional, retail, and predictive metrics. While nothing is guaranteed, everything is aligning. Stay alert, stay data-driven, and stay ahead because XRP's story is far from over. Bitcoin dominance is currently holding firm at 14%. And while that might sound like a technical detail to some, it's actually a very telling number. In crypto markets, Bitcoin acts as the gravitational center, the sun around which all other assets orbit. When Bitcoin moves, the rest of the market follows. Sometimes immediately, sometimes gradually, but almost always inevitably. That's why traders, investors, and institutional analysts watch BTC's price action so closely. Even if your portfolio leans heavy on altcoins like XRP or ETH, ignoring Bitcoin is like ignoring a weather report before a sailing trip. And right now, global winds are volatile. Middle East headlines continue to rock the financial world. And crypto isn't immune. Every missile fired, every peace talk, every headline has the power to push prices up or down. Until we see signs of long-term de-escalation or stable diplomacy, market waters will stay choppy. If you're expecting calm seas, you're in the wrong market. What smart investors do now is use Bitcoin's dominance as a macro sentiment gauge. When BTC dips, so does risk appetite. But when BTC shows strength, confidence ripples across all. Track BTC's dominance carefully. It's not just a statistic, it's your early warning system for larger crypto movements. We're entering a defining moment in the crypto cycle, and it's not one filled with euphoria or moonshot hype. This is the patience test. These are the weeks that define the next wave of winners and shake out the emotionally reactive. Volatility is not just high, it's explosive. 1 minute a coin spikes, the next it plunges. Add to that a flood of breaking news, geopolitical conflict, regulatory uncertainties, and Twitter rumors. And you get an environment designed to wear down even experienced investors. But here's the secret seasoned traders understand. The time to build isn't when everyone's celebrating. It's now in the shadows of fear and hesitation. Accumulation during panic has historically created the most significant returns when euphoria returns. Smart money, institutional buyers, high net worth individuals, and deep-pocketed crypto whales are moving now, not waiting. They're not buying the tops. They're quietly scooping up assets when headlines look bleak and retail panic sets in. It's emotional discipline that separates those who survive crypto's volatility from those who thrive in it. If you can stay cool during these stormy moments and make rational data-backed decisions, you'll be ready to ride the wave when it returns. The key? Turn emotion off. Strategy on. Let's zoom in on XRP's recent price action. Technical analysis tells its own story, and candlestick charts are flashing signals traders can't afford to ignore. After briefly dipping to $1.9615, XRP has mounted a solid rebound, currently trading above $2.05. That may seem like a modest move to some, but it reveals an important pattern: fast recovery on high volume. This indicates that the dip was met with significant buyer interest, likely from institutional or algorithmic players positioning ahead of expected catalysts. Remember, in crypto, prices don't move purely on sentiment anymore. News headlines, macroeconomic forces, and global events all interact to create chain reactions. Here's the ripple effect. Oil prices climb amid Middle East conflict, gives inflation expectations rise, gives markets anticipate. Federal Reserve rate response gives rate expectations shift investment behavior across the board, including in crypto. That's how tightly connected everything is. It's no longer just about one token's chart, it's about how BTC, XRP, ETH, and even oil interact. For instance, if oil surges, it could signal inflation, which may spook equity markets and shift capital toward inflation-resistant or high-growth assets, including crypto. In short, ignore these interconnections at your peril. Smart traders watch the whole ecosystem, not just one chart. Do those tracking energy markets? You're on the right path. Oil stocks are on the move again, and there's a reason institutional investors are paying attention. I've been accumulating oil-related paper assets for months now. Not the physical stuff, not barrels in a garage, but strategic positions in ET's commodity futures and energy sector equities. Why? Because in periods of geopolitical uncertainty, energy becomes the battlefield and the lifeline. Oil prices have always been reactive to conflict, but the moves we're seeing now are less speculative and more structural. Supply chain constraints, shifting trade alliances, and the rebalancing of global oil flows are all pushing energy prices higher. This pressure coincides with a market in crypto that's correcting, creating what I call a temporary divergence. When oil goes up and crypto goes down, it creates an imbalance, and for informed investors, that's an opportunity. It doesn't mean sell crypto for oil, it means understand the cycle. When energy spikes, risk assets fall. But when energy stabilizes or profit-taking begins, that capital rotates, and much of it rotates right back into crypto. This is strategic positioning. Follow the capital, follow the rotation, and buy when others hesitate. Let's go deeper into one of the most important trends shaping the crypto market today: regulated access. The recent partnership between Circle and Fiserv isn't just a business deal, it's a paradigm shift. Circle, the company behind USDC, one of the most widely trusted and used stablecoins globally, is now integrated with Fiserv, a legacy titan in payment processing. That means traditional financial players, banks, merchants, fintechs, can now access crypto infrastructure through the tools they already use. This removes friction and fear, two of the biggest barriers preventing institutional adoption. Traditional finance doesn't want to jump into wild, unregulated waters. It wants to dip its toe in clean, controlled pools. The answer? Crypto through stock markets, IPOs, SPACs, and regulated financial structures. That's why Circle's IPO is getting so much attention. Institutions don't want tokens, they want ownership and exposure through proxies. They understand that's why Coinbase succeeded and why companies like OKX are now eyeing the same play. Expect a wave of similar IP exchanges, stablecoin issuers, custody providers, all preparing their entries into traditional markets. This isn't just about adoption, it's about accessibility. And when legacy finance feels safe with crypto, that's when serious money begins to flood in. Let's come full circle back to XRP, volatility and opportunity. It's easy to fear volatility. After all, it creates losses just as fast as gains. But for disciplined investors, volatility is a tool, not a threat. The latest candlestick data shows that XRP's price movement isn't just bouncing randomly. Volume has been building. Dips are being bought. Momentum is forming. We saw XRP touch a low near $1.96, then climb swiftly above $2.05. In a high environment, that's not just noise, it's a clue. It tells you where demand lives, and it proves how fast sentiment can shift. One strong news headline, be it an ETF update, a ceasefire abroad, or a new major partnership, and the entire market can flip from fear to frenzy in hours. That's why the current phase is so critical. It's a time for watching volume, tracking rebounds, and preparing positions. Don't fall into the trap of panic selling. Volatility doesn't signal the end, it signals the middle. And in crypto, it often precedes the beginning of the next leg up. So instead of running from price swings, study them. React not with fear, but with understanding. This is how positions are built and fortunes made, as the global landscape continues to unfold with conflict in the Middle East, rising inflation, pressure, and volatile crypto reactions. The most important thing you can do is stay focused. Fear is loud, but facts matter more. Look at the signals. Watch Bitcoin dominance. Monitor oil prices. Track ETF developments. Don't make decisions based on emotion, especially not now. The crypto market doesn't reward panic. It rewards strategy. XRP's future doesn't just depend on short-term price moves. It's built on long-term regulation clarity, institutional adoption, and integration with global systems. We are watching that foundation get stronger every day, even if price action looks chaotic. So if you've been watching from the sidelines, now is the time to engage. Hit that subscribe button. Turn on notifications. Get ahead of the curve, instead of reacting to it. And if you're part of the 33% of viewers who enjoy this content but haven't subscribed yet, fix that today. Don't miss the signals. Don't wait until XRP is at $5 or $10 to wish you had taken this market seriously. Stay informed, stay calm, and stay ahead. Because the next chapter in XRP's story is already being written, and it's going to be historic.